Hey traders, Raghee here. Welcome to Charts and Coffee. Hope everyone is having a good Thursday morning. All right, we do have quite a few things going on here this Thursday morning. We have some FOMC speak, as you can see here on the left margin. Lots of FOMC chuckleheads today, 9:15. So in about 15 minutes, the first of actually 5 different speaking events between now and 3:15 p.m. These are going to be difficult to deal with because it's going to be a matter of sound bites. It's going to be a matter of what the topic is. It's going to be a matter of where that conversation's landing in terms of what you and I can perceive might be insight into the rate cuts, of which there are still expected to be 1 to 2. So let's talk about that first as we jump into the conversation about FOMC members speaking. There's a lot of chatter about what the FOMC is going to do. I don't speculate. I just go to the data. And the data is best, most consistent, coming from the FOMC FedWatch tool and the Fed Fund futures. If you go out to December, let's just cut to the chase. If you got to December, this is where we're expecting rates to be. Largely, easily 1/4 point cut, if not 2. That is what's in the data. We're currently at 4.25 to 4.5%. And you can see here, there are still more rate cuts. So I've been hearing a lot about a pause. Yes, there might be a prolonged period of time between now and, say, June or July, depending on the data, of course. What we know today on Thursday, right, at 9:03 in the morning, there could be lots of changes with the data. But what we know right now, what they've said, the data that we've got so far, we are expecting 1 to 2. And I mean, it's kind of crazy to think even 3, probably not probable, but there it is, right? This 350 to 375 column, right, where we are right now is at 4.25 to 4.5. The next column is 1 rate cut, 2 rate cuts, 3 rate cuts. We're more likely to see potentially 3 rate cuts than we are to stay at 1, for whatever that's worth. The bottom line is this: if expectations for a prolonged pause and some more cuts, and then a prolonged pause, in other words, we're not going to likely see the first rate cut till summer. And then once we get the 1 or 2, maybe 3 rate cuts by the end of the year, how long do we stay at this lower level? And that's where it's tough to be a bear, gang. It's tough to look, even at this ugly, ugly chop that we have in the indices. It's tough to have a prolonged bearish target. Doesn't mean that we can't be bearish from time to time as a day trade. Doesn't mean that if there aren't downtrends in certain names like Tesla or Google, we can't get long puts. But at the end of the day, it's tough to be a bear on those broader averages. So those are things to keep in mind as we're going through this very end of February, which brings me to my next point. Tomorrow is the end of the month, which is not as important as the end of the quarter. There's a lot of decisions typically made at the end of the month about allocation, where, say, profits should rotate out, and asset managers might want to buy something that has the probability of continuing to move higher. I know a lot of folks have their eye on NVIDIA. I'll tell you straight up, gang, I could care less what happens with NVIDIA right now because it's been a choppy mess for a really long time. Just because it has earnings doesn't mean it has a setup. Earnings itself is not a setup. It's a spectacle, right? It's an event. It's a scheduled high impact event. And if it makes a big move, I mean, I guess great, but I could care less about the earnings impact. Right now, I could care less about NVIDIA. Please, gang, when you're building your watch list, ask yourself, is the setup about earnings? Because if it is, that's a 50-50 coin toss as to whether or not it moves higher or lower. And I wouldn't say 50-50. It might be 33, 33, 33. 33, it does nothing. 33, it moves lower. 33, it moves higher. The other thing is, when I look at the structure of NVIDIA right now, it's not going anywhere, right? If I want to take advantage of something that's, strong. We've been talking about uptrends for a long time. I just showed you 2 examples of downtrends. There are far better symbols out there that have the higher probability of continuation. What should a watch list look like? What do I teach? All right, what do I teach, gang? I teach relative performance, and this is what I've been doing for decades, right? I teach relative performance-based watch lists. What are strong stocks and strong sectors and strong indices? That's alignment. And then if I can find the best of breed in those outperforming indices or sectors, fantastic. We're good to go. And that's where the focus is. That's why my watch list is going to look markedly different. That's why what I'm looking at is oftentimes going to be markedly different than, maybe what's being discussed on television, right? And those are just basic things to keep in mind. Now, what does look good? It's with the volatility of OPEX, a lot of trends that, for example, were in financials and looked amazing. They've really been, this is kind of Cobra Kai, sweep the knee kind of thing. Financials have really been struggling. JP Morgan, there was a lot of weakness in that. There was some discussion about Jamie Dimon selling shares. There was another discussion like that. I believe an insider sold about $3 million worth of shares in McDonald's. This is a long position that we have because it's an outperformer in the space around XLY. So if you're not thinking about relative outperformance, this is what I've been teaching. I know if you adopt a process like this, I've been testing this for years. And it really started in 2008 for me. This process where I just went absolutely committed to the alignment process, because once ETFs really started to take on more importance, and that happened in 2008. In fact, a very interesting thing happened in 2008. Mutual fund popularity kind of crisscrossed with ETF popularity, and ETFs have never looked back. They continue to be more and more influential, more and more popular. And so they're really cool curated groups of stocks that move together because of their inclusion in the ETF. The more popular the ETF, the more volume, right? The more those stocks are going to be influenced by that group. And as long as you're thinking from that perspective, and again, I'm telling you, gang, not 1 in 10 traders, barely, are doing that. So if you adopt a process like this, you're going to have a really great edge. And that's why I share things like this in Charts and Coffee. I'm no fan of Wall Street. I know they have a job to do, and so do we. What I want here is for everybody to be able to direct their own order flow. What I want here is for everyone to be able to make their own decisions and not get swayed by the news and fundamentals that are out there, get swayed by some guest on television, get swayed by some, naysaying analyst talking about, the markets are going to crash or whatever it is. Be able to make your own decisions about what you're trading and why. Right? Understanding the why is really important. And that boils down to indicators, right? When I show you what's on this chart, and I'm just looking to see if there's any questions. When I'm looking at this chart, let's think about this, gang. Let me grab my drawing tools here. When I'm looking at this chart, anything that's on my screen, I'm not going to give it a name and then just say it's a black box. That doesn't work. That doesn't work for you. Works fine for me. I know what's in it, right? So when we look at every single indicator on this chart, right, that is resistance. This is support, period. Now, whatever you want to call this, you might want to call this a floor, right? You might want to call this buyers or buying. Okay, I like to think of it as buyers. It's certain types of market participants at a price level. If you want to, that's not a floor, sorry. That's done here. So you want to call it floor, buying, buyers. If you want to call it demand, it's all the same thing. What is on this side, the ceiling side? That's the resistance. That's a ceiling. That's selling, right? If you think about it, gang, I don't care what y'all call it. You can call it a peanut butter and jelly sandwich and a ham sandwich. It really doesn't matter. I like to think about the who, so that's sellers. And then lastly, it's, supply. Okay. Whatever you want to call it. Here's what matters. Give it whatever title you'd like. What is it? This is based on historical volatility. So if someone were to say, Rog, how do you get these zones on your charts? Why are they there? Because when I look back on the last, I look back usually a minimal of 6 months. It can adjust. It's on a fixed 6-month look back, depends on volatility. But for the most part, I'm looking at 6 months of look back. And I'm curating the data in a very specific way that I can then get the daily volatility price movement range. Yeah, Cuban sandwich sounds amazing too, Eddie. Yeah, I'd much rather have kind of partial to a medianoche, but I'm with you. I'm with you. And you know what? I actually really like what's the one with Thousand Island dressing? What's that one with the Thousand Island? That might be my favorite. Oh my gosh. Reuben. I like Reubens too. All right. So, when you're looking at any indicator, you have to understand, how is it calculated, right? How is it calculated? What is going into it? Is it price action? And I'm going to tell you, gang, once again, it's sad. If you ask someone, hey, what's this using? Price, volume, volatility, time. Most traders won't know why their indicators are plotting on their charts. It's really kind of an interesting thing. I ask folks all the time, hey, what goes into the indicator? You don't have to give me the secret sauce. I get it. I don't give my secret sauce away, but I'm always going to let you know at least what the ingredients are, right? What's the harm in the chef saying, yeah, we put some cinnamon in that, little nutmeg, a little bit of brown sugar, whatever it may be. I don't have to give proportions, and neither does a chef. However, the person who's at least understanding what's in the meal should at least be able to be told, hey, that's fish with a little bit of white wine and lemon, right? Whatever it may be. So keep that in mind. So what's the blue line, Jeff? I love it. Let's go with the theme. What is the blue line on my chart? Okay, that one's easy. Ready? This is an anchored volume weighted average price. Okay, Jeff, next thing is I've anchored this to January 2. This is the first trading day of the year. So now you know why it's there. Now, here's where some of the customization comes in. Right. So up in here, I've got the maximum permissible and standard deviation levels. These two lines are actually related to this thing. It's the maximum permissible and the standard deviation. Same thing here. Standard deviation, maximum permissible. And this is all based on the anchored VWAP. So what I do is I create this here, let me show you with a little less noise. There we go. Not noise, a little less information. Okay, you see that there? That's the resistance. That's the support right down in here. And it's all being built on this January 2. Again, that's the level that you should expect discussion of when you're talking about indicators. Look, no one who creates an indicator is under any pressure to say, hey, I'm going to give you the code and tell you exactly what I do. Now, gang, a lot of people spend a lot of time and effort putting something together, but at least, let them know what it is. Is it a price-based indicator? So with an anchored volume weighted average price, it's volume and price. It's volume and price. That's the reason that thing plots there. An anchored volume weighted average price believes that just because price went to a certain level, that alone doesn't make it meaningful. Getting to a certain level and then participation at that level, that's what makes it meaningful. And that's a philosophy I believe in. If you want to think back to folks who talk about the importance of volume, gang, a century ago, that was Charles Dow, right? So that's what it is. And then the dashed lines above and below. So let me show it to you, say on the NASDAQ, so everyone can see that. And this is a specific volume weighted average price that I use. Okay, so I'm gonna, no, I don't want to remove it. I just want to hide it. Hide and go seek. There we go. So same thing there. There is the January 2. Here's the resistance of that tool. Here's the support. Pretty cool, right? And that's just an anchored VWAP. Now, if I add my volatility tool back in, so now I have a tool that looks at price and volume. If I add my volatility tool back in, now I'm looking at price, time, or day of week, and volatility. And then you start to stack up all these things, and then ultimately you've got a much more four-dimensional view of what's going on in in any symbol. All right. Okay. Hey there, Ben from Australia. Oh, awesome. Is there any way to trade the CME Fed probabilities for a rate cut? Yeah, you can look at the Fed fund futures. You can look at the Fed fund futures. They're not super liquid, but it is a futures contract like crude oil or gold would be. But if you take a look at the Fed fund futures, you need a futures trading contract account to trade that contract. It is a little illiquid, but yes, I believe you can buy puts, calls, and trade that. I've traded it in the past, but it can be a little illiquid. But yes, you can trade the Fed fund futures, just like you can trade bonds or anything else. Okay. All right. Next up, and I'm just about out of time here. Next up, Roku. Are we looking at Roku putting in a minor low? Yeah. So we're going to look at Roku this week, or I should say today. Jazz, it's been on the schedule. It's been on the watch list this week. I'll be scheduled in the room in about 2 minutes, and we can definitely take a look at that. I'd like to see where it is after. I'd like to see where it is after, say, 10 o'clock. One of the things that we were going back and forth with in the mastery, let me show you, was whether or not I wanted to buy the anchored VWAP. And this is also, if you take a peek at the middle line right here, that's the middle of my mean reversion. So I have a specific automated mean reversion, and that's right there. And that too uses price and participation to calculate where it's at. So Roku could be one to keep an eye on, but I passed on it. I do like it. It's been on a watch list that I've shared publicly for a bit, but I think it's going to be opening up around 86 and change. I'll keep an eye on it. Getting above, by the way, the minor low would complete north of 87.42. The minor low. Eddie asked, do I look at PE ratio of a stock? Eddie, I'm a trader, right? Even when I do longer term position trades, I do not. I'm almost 0% interested in fundamentals. Yeah, I do not, or fundamentals as I call them. No, I do not look at a PE ratio of a stock. I mean, it's fine to know, but if you want to look at some of those things to whittle down a watch list, there's no harm in that. But at the end of the day, my setup is going to come because price, volume, volatility, time of all preferably dovetail, giving me multiple confirmations as to why something is at a level of support or resistance. So yeah, thanks for the question. I appreciate that. But no, I don't use that. I absolutely do not. All right, I think we're through the questions here. So thank you as always for being here for Charts and Coffee. I will see you all in the Sector Secrets Mastery Room momentarily, and I'll see you all in Simpler Central at 10:30 Eastern. Okay, gang, until then, be good to each other.